Hello, 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 everyone. We we're obviously a little bit different this morning because I've got our guest speaker and keynote speaker, Eloise Jennings from JH. Welcome, Eloise.
Brian, good to be here.
Hello,
everybody.
Thanks for attending.
Yes.
We feel very privileged. We don't often get visitors, so it was lovely. Eloise has got a wonderful office down in the southwest in Dunsborough. Eloise has been with Real Estate Brilliance on and off for, oh goodness,
8 years?
8 years,
7
years.
17.
They've lived and breathed a lot of the Real Estate Brilliance collateral, and as a result, they've done throughout the course of the morning. So thank you for attending. And we'll talk about a couple of those interesting things we were talking about as well.
I think we could chat all day and all night.
We probably could, yes. We've got a lot in common. We've got a lot in common. Great to have you back to Supercharge. Goodness, I think it's Supercharge 72. So it's great to have you all, and welcome to each and every one of you. So let's have a look at what's happening. Actually, it's Supercharge 73. I've just noticed. Let's have a look at what's happening across the country at the moment. So the market's actually kicked on across the continent. Now we know Perth's going nuts, so I'm not going to play that down at all. I know that we've had sensational growth, but the home value index rose 1.6% in the March quarter, adding around 12K to the dwelling values. That's Australia wide, folks. So pretty unbelievable that the East Coast, being Melbourne and Sydney, have kicked on as well. And we'll look a little bit deeper in that and on that and how and why. Is it just only 0.% the last 12 months? That's Sydney. Melbourne actually plateaued last month with a 0% growth and a negative, the only negative quarter, negative 0.2%, but still showing a 3.2 annual growth, which is Melbourne. Melbourne seems to be the state that is plateaued or struggling the most, but certainly Sydney is defying all logic. Brisbane going nuts, 1.1 for the month, 3% for the quarter, 15.9 for the 12 months. Adelaide 1.4, quarter 3.3, and annual 13.3. So big numbers from Brizzy, Adelaide, and of course Sleepy Hole, Perth, 1.9, 5.6, 5.6 for the quarter. That's massive. So the Sleepy Hollow of Perth, 19.8 being the biggest change in property prices for a really long time. So let's have a look at the combined capital cities, 0.6 for the month, 1.5 for the quarter, and 9.7 annually. So we're still showing a nearly 10% growth for capital cities, which is pretty astounding because this has gone on for years.
I know. Dunsborough's the same in the last 12 months.
Yeah. 10%. Well, that's an extension of the Western suburbs.
Absolutely.
Whatever the Western suburbs do, that's what Dunsborough's doing.
Usually 3 months behind.
Yeah. Combined regional performing well as well. 0.6 last month, 1.8 for the quarter, and 6%. So even the Mandurians and Port Hedlanders and the Geraldtons and our regional offers and also regional Australia still performing quite well, but they have pulled back ever so slightly. So let's look deeper, and I might close this because I'm sure you. February's increase taking the current upswing in housing values through its 14th straight month of growth. That's insane, isn't it? Since declining negative 7.5 between April 22 and January 20. That's how long this has gone on for, 14 straight months. The national HVI has increased 10.2, or in dollar terms, approximately $71,000, rising to a new record high each month since November last year. So pretty amazing what's going on across the country. Every capital city except Darwin recorded a rise, but also Melbourne as well had a negative quarter. At the one end of the scale, we have Perth housing market, where values were up 1.9 over the month, followed by Adelaide and Brisbane, 1.411. The national quarterly pace of growth has accelerated from 1.4 in Q4 last year to 1.6 in Q1 2024. Rate hikes, cost of living pressures, and worsening housing affordability are all factors that have contributed to softer housing conditions since mid last year. That certainly wouldn't be in Perth. However, an underlying of housing relative to demand continues to keep upward pressure. So once again, shortage of homes, shortage of housing. We are bucking a trend here. There's absolutely no doubt about that. And if our because there is mortgage pressures. Let's read some more. Net overseas migration to WA was running well above average at 18,122 in September quarter of last year, up from the decade average of 4,639 per quarter. The extreme flips in the demographic trends have delivered a significant positive demand shock across WA housing. After being led by the upper quartile, most of last year's the strongest growth conditions have migrated to the lower quartile across most capital cities. So basically, what they're saying is the growth in population obviously was stronger early last year, and that was still clawing back the deficit that we had for COVID. So there was still that backlog that is slowing, but WA certainly is not part of the slowdown when it comes to the population growth. Regional housing markets are also recording a rise in values with similar levels of diversity as their capital city counterparts. The volume of home sales through the first quarter of the year was estimated to be 9.5 higher relative to Q1 last year. So let's have a look at our rental side of things. I know we've got some rental people and principals in the group, either attending or picking it up on the recording. The National Rental Index was up 2.8% in March quarter, the fastest quarterly pace of rental growth since the 3 months ending May 2022. That's 2.9%. So rental conditions do show some seasonal strength through the first quarter of the year, which helps to explain some of the renewed upward pressure on rents. However, the annual trend in rent growth has generally been moving higher since October last year, implying the recreation in rental growth is more than a seasonal inflection. This is interesting. I want you to just pay attention to this. Is Melbourne has recorded one of the most significant lifts in gross rental yields. Now, if you look at what Melbourne's been doing, their growth rate has obviously plateaued. So as we know, when our growth rate starts to plateau and when our residential real estate market starts to hit its peak or even starts to downturn, the rental market picks up. And that is evident here from 2.79 2 years ago to 3.57 in March 2024. So that's interesting. Based on housing finance data, investors have recorded the most substantial lift in activity. So investors are back. Investors are back. Certainly they're back in Perth. We're getting all the Eastern States investors. I wonder if they're talking about them because all of a sudden every real estate agent has got investor buyer agents and buyer companies over East, and they're all big buddies and selling properties to them. It's quite funny, but cool.
Yeah.
You know, whoever buys our properties, we don't care as long as they pay the prices we need them to.
And resell with us.
Exactly, and we get the management.
Yeah.
Overall, it looks as though housing markets are continuing to traverse the high interest rate and high cost of living environment better than most would have expected. So once again, we're weathering the storm of the high interest rates and the high living costs. I would say that's possibly because every homeowner has now got an ATM as their home because they've made $100,000 or $200,000 in their properties. And a lot of them will be able to draw on those. So that makes housing, not only housing affordability, but your cost of living a lot easier when you're sitting on a few $100,000, and some are a lot more than that. So it's quite an interesting thing, the way the market is turning out, and it's going to take some major changes. And they're talking about interest rates being lowered. If the market continues to perform like this, I can't see the interest rate being lowered anytime soon. In fact, it would have to go up. But anyway, let's park that. The fundamentals of housing supply and demand remain out of reach out of balance in most regions, placing upward pressure on the cost of housing. The supply side of the housing equation continues to be insufficient. As we approach the July 1st starting point for the federal government, 1.2 million new well-located homes target dwelling approvals are yet to show any meaningful uplift. 12,850 homes were approved for construction in January, roughly 25% below the decade average, and well below the 20,000 average monthly run rate of approvals required to see the 1.2 million homes in 5 years. Mr. Lawless said at the same time, the residential construction sector continues to run up against shortages in labor, high material costs, and depressed profit margins. So once again, it's not as simple as building 1.2 million homes, is it? How much building's going down down there?
Well, all the lakes are infilling now, so buildings. It's the same thing. There's not enough apprentices, and the mining. The FIFOs. The labor is extracted north.
Well, if they can earn 120, why would they go and earn 80 laying bricks?
Absolutely.
Yes, so still a very serious problem. And while this problem continues with shortage of stock across the continent, we will continue having growth rises, but we will continue to have shortage in demand and shortage of sales, which doesn't really help you guys. But the Real Estate Brilliance clients get most of the clients, so we're all good. On the demand side, the rate of growth in Australia population reached 2.5 over the year ending September 23, the fastest pace of annual growth since the commencement of National Population Series in 1981. So that's huge. Housing affordability is deteriorating as home values, rental rates, and the cost of servicing a mortgage rise. So these are the downsides, faster than household incomes. There will come a time where, of course, and it happened in New Zealand, where people just couldn't afford the prices. And we're going to talk about New Zealand in a second, because we like to look at our brother or sister or our New Zealand counterparts to see what they're up to and what's happening in there. And we do have clients, and parts of our members are coming in from New Zealand, so we want to service them as well. So economic conditions are easing and labor markets loosening. So there is some reprieve in the market, but it just doesn't seem to be coming anytime in a hurry. So make hay while the sun shines, I say. Let's have a look at New Zealand. CoreLogic house price index rose 0.5 in March, similar to January and February. February's muted gains, taking values 1.1% higher over the first quarter of 2024. The average property across New Zealand now stands at 934,806. That just shows you how well New Zealand is performing, because that would be the second highest next to Sydney, which is, I think, $1.1 million average house price. In New Zealand, the average house price is $934,000. Go figure. So that's up 3.2, which is 29 grand from September through, but still 10.4 below its recent peak. But people have still got a lot of equity in their properties. So they saw significant growth, up to 30% in their growth. The inconsistent nature of the turn so far was evident again March, with Wellington rising strongly, 0.9, Christchurch, Dunedin and Auckland also showing gains of 0.4 to 0.6%, but both Tauranga, Hamilton edging down 0.2. So New Zealand have recovered from their downturn, which Sydney and Melbourne did feel, but certainly did not get anything like what New Zealand got. But they are on the mend, but ever so slowly. The New Zealand market is still struggling with affordability and raising of deposits, and ability to service loans. So these are genuine constraints that hold the market at bay. So be mindful that even though we're going like a freight train here in WA, also in Adelaide, excuse me, and Brizzy, be mindful that it will slow down, taper out. So be mindful in your presenting about strategies, what strategies, pricing. I wouldn't be pricing as I never have, but certainly, and we'll talk to you about how wonderful you've done through the 5-stage selling strategy and the no price marketing strategy, and how you adapt to different markets. Because we talk about Perth being a micro market for the Australian market, and the Australian market being a micro market for the world market, and little old Dunsborough is a tiny little micro market of the Perth market. So it's very interesting to compare, and it's fascinating how you guys have adapted to the markets that you've had, and not just continued performing, but increased your performance. So it's going to be exciting to talk to you. But let's have a look at how everybody's fared in the month of March. It was a pretty awesome